Hey traders, welcome to part 3 of the 4-part series, and now that we understand how to identify actionable flow, we're going to be able to set some alerts so that we don't miss out on this flow. This is going to be very important whether you're a full-time or part-time trader. At some point throughout the day, something might come up, right? You may be busy, like I said before, you might be in a meeting or you might want to go out for lunch. We can go through a whole list of scenarios, but the key point is that we don't want to have to stare at our monitors and everything. We don't want to have to stare at our screens from open to close. But at the same time, we don't want to miss out on a trade opportunity, right? I can't tell you guys before Titan Flow how many times I would stare at the market from maybe open to 12 o'clock, and then it seemed like at like 12:05, 12:30, 1 o'clock, a really good trade opportunity would come through that I missed out on because I called it for the day, or I went to cook lunch, or I went to the gym, whatever the case was. I was like, man, I just spent 3 hours working on the market, didn't see too much. Of course, as soon as I step away, something comes through that would have made my day, right? And so we want to avoid these kind of scenarios. So what we're going to want to do is set some alerts. And if we go over to the bottom right here, you see the bell icon right there. Then what we're going to want to do is once we're on this page, we want to click plus. Okay, and now minimum premium, I'm going to set this at 100 grand. I think that's a good middle ground, right? That's not a massive order, but at the same time, it kind of filters out those little 50K orders because it can get a little tedious getting, you might see your phone get blown up with notifications if you're looking at every single order that comes through. All those little 30, 40, 50K orders that come through, I want to filter those out. I'm not too worried about those. Expiration, this one you can play around a little bit with. As a day trader, I tend to notice that institutions, when they're betting on a short-term move, they're either going to buy weekly contracts or the next week's expiration. Now, if you're a swing trader, if you like to swing 2 to 3 weeks out, you're going to want to use 21 days out, potentially even 35 days out. You might want to see the next 3 to 4 weeks worth of expirations. Now, again, as a day trader, I'm keeping it at 14 days. And now that we get sort of into the nitty-gritty details, let's keep in mind what we learned in part 2 about characteristics of aggressive flow. I want to see calls and puts, right? Personally, I'm just going to select stock flow. And this varies a little bit. Sometimes, if I don't have any responsibilities for the day and I have the time and energy to stare at the market a little bit more and be a little bit more serious about my trading, then I'll turn on ETF flow. And let me explain why. Because you might find that you get blown up with ETF flow. There is going to be a lot of flow that comes through. And it might not be a bad thing. Sometimes ETF flow is good. It's good to see that flow. But at the same time, if I have a lot of responsibilities at work, or maybe I have a doctor's appointment, whatever the case is, I'm not too worried about the ETF flow. I just want to see the stock flow because I don't have the time to get blown up with ETF flow. Kind of similar to the reason that I don't want to get blown up with 50K orders. So I'm going to keep it at stock flow. And I'm going to do bought and sold. And we'll dive a little bit deeper into that towards the end of this video. Again, remembering what we learned in part 2, we want to look at out of the money. Now, volume open interest, this is a little more controversial of one. And the reason I say that is because in the first hour of the market, you can't expect the volume to be greater than the open interest, right? 5 minutes into open, volume is at 0. Okay, so you would need a ridiculous amount of aggression for your volume to exceed your open interest. So here's what I do personally. I'm going to let you guys know as someone who trades full-time. In the first hour, I leave this filter off. And I turn on sweeps. And then I go back in. So let's say I'm done. I'm good. I click my check mark. Now, after the first hour, I'm going to go in and click edit, and I'm going to turn that on. Again, that's personal preference. If you don't have the time, if you have a responsibility at 10:30, just go ahead and leave it off. Okay? It's better to see a little more flow than a little less, or if you're someone who wants to see less flow and you want to be a little more selective, just leave it on. Okay? Don't play with it. But if you do have the time and you can do it, I would recommend doing that. After the first hour of the market, go ahead and edit your filter so that you see only orders where the volume exceeds the open interest. Now let's talk about sweeps versus blocks. Sweep orders are going to be orders that, just like we talked about in part 1, private transactions, but they're still sent to the open market. Now with a block trade, this is a privately negotiated transaction, most likely between either two institutions or an institution and the market makers. Now, these orders can get very wild in terms of being deep in the money or ridiculously far out of the money, but significantly above the ask or below the bid. It's kind of hard to tell the intentions. And when we are identifying actionable flow, the definition of actionable flow is having confidence in the direction of the trade. And so if we don't have that confidence with blocks, there's a little bit of mysteriousness between what are the intentions of whoever set this order. So we're going to go ahead and we're going to filter that out and only look at sweeps. Click check and I'm done. Now I'm going to set a second order with the same exact criteria. Calls, puts, stocks, sweeps, out of the money. But now I'm going to go ahead and I'm going to click on sold BB and bought AA. And all that means is that the order was sent below the bid, signifying sold, and bought above the ask, so above the ask. Now these orders are much rarer, but much more aggressive. Just think of it as another added layer of confidence in the order. And think of this, and put yourself in the institution's shoes. If you were trading, and basically it's almost like if you sent a market order, right? If you sent an order above the ask, it shows that you want to be in this trade so bad that you're willing to instantly be down on the trade, because when you send an order, when you get filled above the ask, that's what happens. You're instantly down on the trade. Because not only did you buy at the top price range, you basically said to the peak sellers, if the bid ask was 3.5 to 4.0, you just walked over to that person looking to sell this contract for 4.0 and you said, listen man, I just want to get in this trade. I'll give you 4.2 for it. I'm going to give you more than you even want for it. Just get me in this trade. That's basically what we're talking about when we're talking about bought AA and sold BB. Or if you're a seller and let's say the highest bidder is willing to pay you 3.0 for it, you basically go to that seller and you say, look man, I'll sell it to you for 2.8, just get it off my hands. All right, I want to get out of this order. That's what sold BB is going to be. So that is a very high level of aggression. We want to see those orders. So that's going to be my second filter. And now that I have my filter set, make sure that you go into your settings on your iPhone, go to notifications, make sure that notifications for Titanflow are turned on, and then anytime an order comes in throughout the day that fits any of the criteria for the filters you've set, it's going to send you a mobile push notification so that, as I said before, you don't have to stare at your monitors, you don't have to stare at your phone all day. You could be, maybe you have to run to the bathroom. We're human, we have to run to the bathroom, but you have your phone on you and you get alerted, right? Maybe you don't get any alerts, so you can kind of settle down and relax and be done trading for the day because nothing's coming through. But once those orders start to pop back through, maybe you can hop back on for the day, right? The key point here is that we're able to trade when there's quality trade setups instead of staring at the market hoping for quality trade setups to come through. All right, guys, that's going to do it for this part 3. Head on over to part 4 once you let this sink in a little bit, and I'll see you guys over there.